I think we still maintain the same guidance. We don't expect any moderation. We still expect a good demand because the rural demand is quite good. The monsoon being very active. So we expect a strong demand in the last 2 quarters. So overall, we should be able to maintain 18-20% the guidance.
All right. Has the off-balance sheet exposure to Shriram Ventures now been recognized on your books? And I'm assuming it is currently classified as standard?
Yeah, it is classified as standard because we have taken the fresh valuation report of the underlying companies under SVL and from BDO, and the valuation report suggests that they have enough, there is enough asset to repay and cover the guarantee given by us. So, and SVL shares are mortgaged to us. So, we are quite confident that it will be resolved. But the main focus would be how SVL would be able to repay the NCDs on time. That is next year, June 2019.
Right. So then what kind of further improvement are you expecting in your gross NPA number? Where do you see that number by, say, March 2019?
See, if you look at IGAP under provision, it is 9.15, and this quarter we have seen 17 basis point improvement, and we expect another 50 basis point improvement by the year end.
All right. Your net interest margins also for the quarter have been more or less steady around 7.4%. What is the target NIM range that you would be comfortable with going into next 3 or 4 quarters? Because I believe about 25% of your liabilities will come up for refinancing in FY19.
See, we expect the margins to be maintained, even though there is likelihood of increase in borrowing cost by 15-20 basis point. We expect it to be maintained mainly because our lending is progressively more in rural market and into used vehicle. So passing on 15-20 basis point may not be a big challenge for us. So we should be able to do that. So we expect the same margin to be continued.
All right. Sir, just wanted your thoughts on the possibility of a merger of Shriram Transport Finance with Shriram City Union Finance, or what kind of, are there synergies to be seen over there, and your thoughts if presented with such a possibility?
See, basically we are looking at the advantages, synergies that can be developed between the companies. But it is more of an internal discussion. We have not really discussed with anyone and not discussed at board level. So I may not be able to really give more details. But however, we are looking at the advantages in the liability cost and the OPEX. If there is significant advantages and if you're able to bring better synergy, then we will get into further discussion on that.
Okay, so right now it is under active consideration.
Yeah, you're right.
All right. And sir, when do you see the next capital raise? Would you be looking at fundraising in 2018 itself? I'm talking about equity capital.
This year we are not looking at. We have enough capital, and we should be able to manage our growth within the existing capital.